Hello, welcome to this year's Cyber session on the World Payment Report 2021 from Capgemini. I am Elias Ghanem, Global Head of Market Intelligence at Capgemini Financial Services, and I will be moderating this panel discussion today. This year, the World Payment Report explores Payment 4.x, an experience-driven environment that witnessing even more industry consolidation and attracting tech expert ecosystem players. It analyzes how the payment industry must adapt to digitally enthusiastic customers and escalating B2B2C demand for next-gen payments. In our session today, we will be discussing the state of the payment industry and how you can put a plan in motion to succeed in the Payment 4.x era. Joining me in the session today, we have Renata Caine, SVP International Strategy and Planning at Marqeta, the world's first open API modern issuing platform. Philippe Panaino, Global Head of Cash Management at Standard Chartered Bank, a leading international banking group with a presence in more than 60 of the world's most dynamic markets. Claus Richter, Deputy CEO and COO of P27 Nordic Payments. P27 is a joint initiative by Danske Bank, Handelsbanken, Nordea, OP Financial Group, SEB, and Swedbank, exploring the possibility of establishing a pan-Nordic payment infrastructure for domestic and cross-border payments in the Nordic currencies and in the euro. And Jeroen Holscher, our Global Head of Payments and Card Practices at Capgemini Financial Services. Welcome to all of you. Welcome, Renata, Philippe, Claus, and Jeroen. So, with no further ado, let's jump into our discussion. Today, we have 3 items on the agenda. First is the impact of customers' growing digital appetite and the skyrocketing of next-gen payment methods on the payment industry. Second, opportunities presented by the regulatory environment, and finally, the urgency to upscale technology and ecosystem capabilities to strive in the Payment 4.x era. Jeroen, I'll ask you the first question to set the context. How did global non-cash transaction volume and next-gen payment evolve last year, and what are Capgemini predictions for 2025?
Yeah, thanks, Elias. Quite interesting, of course, with the pandemic situation. What we've seen after 8 years of double-digit growth, 2020 growth figure was 7.8%, coming from 16.5% in 2019. Of course, we expect a rebound of that growth, and between 2021 and 2025, year on year, 18.6% growth is expected, and we will land at 1.8 trillion non-cash payments transactions globally in 2025.
1.8 trillion transaction. Wow, that's truly interesting. What are the drivers of this burgeoning growth?
Yeah, I see 3 main drivers. First of all, according to our Voice of the Customer survey we did in 2021, 45% of the customers now are frequent user of mobile wallets, coming from 23% in 2020. So that's doubling up. And frequent using is more than 20 transactions a year. So that's definitely one of the drivers of growth. The second driver I see is instant and e-payments, which we expect to take account of 25% of the total non-cash volume in 2025. And the third driver I see is, of course, all those new payments instruments which are emerging, leveraging invisible payments, wearables, biometric payments, maybe crypto, maybe central bank digital currencies, which will account for the rest of the growth. So overall, it's multiple factors which is helping this growth to accelerate.
By all means, a lot of changes all over the place. Would like to see the side from the banking approach. Philippe, how are Standard Chartered Bank and businesses embracing this rapid change in customers' payments needs?
Thank you, Elias. Evolving business models rise of Industry 4.0, e-commerce, mobile money, all demand a better payment experience via better orchestrated service offerings across all our markets. Payments simply need to match the speed of commerce. At Standard Chartered, we believe that in the process of rethink, one must also disrupt oneself. True transformative growth is not possible without a critical rethink and a rework. If we don't disrupt ourselves, we risk obsolescence, as better providers will emerge and fill the space. It's clear that collaboration would be key as we improve the payments experience for our clients and their business processes. The opportunities around co-creation, co-innovation, and value creation are enormous, but finding that sweet spot makes tomorrow's winners.
And the sweet spot is what we'll be discussing quite a lot as we go in today's conversation. If we look also at the global B2B non-cash transaction, we are really seeing, as part of the estimate that Capgemini came up with, that the B2B non-cash transaction will increase to reach nearly 200 billion transaction by 2025. Here, Claus, I look at you. How will automation, real-time payments, and open banking help new players offer innovative propositions in the space?
No, I think it's quite interesting. I think maybe we should add one dimension to those components of automation, open banking, and so on, and that's mobile. Because I think actually what we see even in the B2B space, that these different factors, they come together in enabling different new services that actually drives volume. I see, for instance, in some of the different industries, in the car industry, etc., you know, invisible payments that sits underneath the technology and actually start paying for different services. They come through on your mobile apps, etc. But I also see that if you look at this from a supplier side, obviously the technology of integration into the financial industry is just becoming easier. So with the open banking space, with real time and with automation, then you actually have the opportunity for smaller players to create quite impactful products and play a different role in the industry. So I think you see a more diversified opportunity when you look at as a corporate customer into the financial world. It's not just banks that are giving you an opportunity or a solution anymore, but pretty much anyone who has a computer can basically start up and create services. And we see that diversity now.
Interesting that you mentioned this. Anyone could open his shop and start selling. There is in fact a major trend which called D2C, direct to customer. And we are seeing the direct to customer business model are an emerging trend, as you just mentioned now. Renata, from Marqeta point of view, how can payments help in offering a personalized experience to user?
It's a great question. Thank you, Elias. I think if you consider the landscape today between the large FIs and the fintechs who are focused on new and novel digital experiences, it's the experiences that are winning the consumers over. Many of the experiences are the result of using data to bring something meaningful to the consumer. And if you think about the massive amount of data you can capture as a result of a payment, you know you know where a consumer is if they are making an in-person transaction at a terminal. You can suggest stores nearby. You can suggest places where you can offer discounts. You can look at historical data. What are the things that they're interested in, and start to offer suggestions as well. I always think about this example that someone brought to us and said, I want to be able to see that somebody just had dinner and send them through the app an offer for gelato down the street. And there's a benefit to the merchant. They're getting consumer traffic, and all of this is done via a mobile device. So this is just one example, and I think there's countless others, but technology is very much behind the direct to consumer trends.
Impressive. And to our listener, please count the number of times you're going to listen to the word experience. We're not talking about payment. We're talking about experience all the way long. You're going to see that. If I look at you, Jeroen, just to put some numbers here, one thing that we are seeing is the payment instrument mix is undergoing a major overhaul, with the dominance of traditional methods fading away faster than ever. What strategy should merchant acquire deploy to ensure an end-to-end coverage and financial inclusion?
Yeah, first of all, I think it's a big challenge for merchant acquirers to be able to offer that variety of payment methods, to offer that optionality, which is addressing the customer needs. So I think that's the first challenge. And what I see in market actually is more and more partnerships arising to I would say, to face this challenge and help out each other. So processes helping banks and I would say to be able to offer all that different options. Second, I would say the difference, and I think Philip, Claus and Renata were referring to it already, the difference is made at the checkout in terms of what can you offer additionally than just the payment. Is it the financial part? Is it the loyalty? Is it information which helps the merchant selling better? Those type of things is, I think, second. And for financial inclusion, I think with all these optionalities, there comes options to the table, which is also for the non-banked available. Maybe that's crypto, maybe it's in the future central bank digital currencies, different type of wallets attached to, I would say, mobile phones or whatever. I mean, everything is possible. So I think in that sense, it's quite a challenging environment to offer the right experience to the right client. But if you solve it, it's the option as well to be relevant for your customer in the end.
So clearly, Jeroen, listening to you, and clearly the old-fashioned credit card has maybe tough journey ahead of them in terms of remaining domain payments. Renata, we've been talking about the experience, and if we link it with the report, payment in the 4.x era is embedded, invisible, and they are here to enhance the overall customer experience. Would you agree that new age players lead in this era due to lower barrier to entry and technological ability?
It's a great question. I agree that both low barriers of entry and tech agility is what have powered innovation, and we're seeing the speed in the market. If you take the complexity away from both the financial stack and the tech stack, new age players have the opportunity to build their businesses with the focus on the experience. And if you're counting, I'll probably say it many more times, but they're focusing on the experience that they bring to the market or the disruption that they're trying to achieve. Similar to the direct to consumer question, in my example of data, these trends are powered by the fact that the focus can be on something other than infrastructure and something other than the financial stack. So they can focus. The example I think of is digital banks. They win because the UI they've built is pleasing, it's useful, not because they've built something on top of Marqeta or a similar company. Again, the focus is on what are they bringing to differentiate from their peers.
By all means. Philip, any thoughts on Renata's comments?
Yes, my view is the competitive landscape is driven by first movers who can, between themselves, create that better payments experience, solving for all or some of the key challenges. Nevertheless, nowadays banks are focusing on innovation, becoming more agile and remaining relevant to their customers. So with regards to low barriers of entries, yes, for consumer to consumer, they've been there for quite a while, and even retail seem to be getting back into shape to defend the landscape. Standard Chartered Bank nurtures a perpetual challenger mindset that we can keep reinventing ourselves. With regards to technology agility, it's a skill that can be taught, and banks have now accelerated that learning. Do not underestimate the power of the experience driver.
One more time on experience, by the way, if you're counting, we have surpassed already the 10 times. Well done. Great. Now that we talked about the payment for that access, we talked about the experience, we talked about the role of data. Let's talk about something very important. Our second portion is the regulatory environment. Clearly, there are many opportunities that are coming here. And Philip, let me start with you. Regulatory compliance is the top #2 operational cost area for banks. You must do it. If not, you ended up with a fine. In recent times, after such a huge investment made into market initiatives, into regulations, such as ISO, EPI, CBDC, can they be considered as an opportunity despite the cost burden?
The recent wave of market and regulatory changes, for instance, like ISO 20022, have been very fundamental in nature and has forced banks and central banks to rethink their incumbent infrastructures and if they are actually capable of supporting such changes. In many cases, the simple answer has been to re-platform, leveraging new, more scalable technologies that are able to support a significantly larger volume of data required to support payment flows, but also future-proof the continued increase of global volumes. The anecdotal benefit from these changes, in my opinion, is as follows. One, to leverage the structured and detailed data fields to standardize messages from clients, improving front-to-back efficiency, but also providing that much more improved payments transparency standards to make markets safer from financial crime. Improve turnaround times and transparency on payment status for clients, telling them where's the payment, what's happening with the payment, increasing that scalability to future support growth as our industry grows, and ultimately reducing costs to support new technology and data storage.
It's so interesting to listen to you like this, and I'm trying to think about the regulators looking at the payment for that X. And I ask myself, I'd like to ask all of you, what should be the regulator's standpoint on payment for that X? Let's put some context here. The European Banking Authority, famous EBA, has proposed to come up with a framework on a bank-led digital marketplaces. And countries like the US, like India, like China are restricting monopolies on a war footing. Jeroen, from a perspective, should the tech giants and the fintechs be subjected to regulations as well?
It's usually the elephant in the room. Eh? It's a sensitive and at the same time a very complex topic. In my view, when you stand up, I would say, infrastructures and solutions for payments unregulated, but have a potential impact on the stability of the entire system because it gets too big or too, I would say, too high value in terms of transactions. I think it's right that the regulator steps in because everybody benefits from a sound system of the payments industry. That's what helped us in growing this industry, and it's vital for the economy overall. So I can imagine the regulator steps in and tries to control that part of the problem. If you speak about the level play, go ahead. If you speak about the level playing field, it's quite different, right? It really depends on which shoes you're still standing. I think what we've seen is moving with open banking, where I would say regulated players are forced to open up towards open finance, which is even going further. I think there are trends there where banks say, well, why not opening up also the fintech? So if we need to share, why others are not sharing? And even further, if you think about it, in payments, you have a sort of a method of interchange fees to get everybody sound and making some money on the system. And why not for data potentially? So I think in the end, the end game should be, of course, to improve the overall system. That's the regulator's view and enforce competition. But there needs to be a healthy business for everybody in there. And I think that's the big tension which is there, which is not solved overnight and will not be solved overnight. But I can imagine the regulator is watching this very closely, just from an economical and a vital infrastructure perspective.
By all means, the landscape has changed. We used to have the traditional banks, then we have all the big tech that showed up, all the fintech that showed up, and everybody, after all, is regulated by the same rules and will need to fulfill that. Let's look also a little bit into regional. And we are seeing a lot of local and regional payment schemes building up. We are seeing the P27 in the Nordics, EPI in Europe, RuPay in India, Altos in Indonesia, FPOS in Australia. Klaus, who are within the P27, you lead the P27 Nordic Payments. Do you see the landscape becoming more fragmented and localized as against an interoperable and standardized landscape? Klaus, may I get your answer?
Sorry about that. I think it's a two-dimensional trend that we're seeing actually. One which on a regional level is streamlining and standardizing this and actually making it more generic. So like an initiative like P27, which is streamlining this in the Nordic. However, on a more global scale, I think it will actually fragment the setup before it becomes more harmonized. And what I mean by that is that when you look at global payment systems today, you're actually looking at the card schemes. And the card schemes are, of course, truly global, and you can use your card wherever you go in the world. Whereas when you talk around the infrastructures around account to account, you are either domestic or at the most regional. I do see a trend towards that those regional account-to-account schemes actually wants to create either interoperability at the scheme level or actually at the technology level. I think that you see that you have players like some of the global players that are shifting from the card world to the account-to-account world, and they want to create global interoperability at the technology level. And I think these trends we will see increase over the next few years, both at the technology level and on the scheme level. So at long term, I actually see that we will have harmonization in this, but it will take a number of years.
Long term, I like it. Long term and harmonization are coming there. Thank you so much, Klaus. Jeroen, if we try to ask the same kind of question for the famous EPI, European Payment Interface, that is infrastructure that's building up here. The API aims to become operational by 2022 as the first phase. How, according to you, will it play out as an opportunity for the European banking industry?
I mean, to Klaus' point, EPI initiative is also building I would say, a way to improve in the end the customer experience in payment, but then on a Euro level actually. Moving away from the more fragmented local solutions which are out there and trying to build the best-in-class payments to the mobile and to the e-commerce, leveraging the instant rails in the end. So for me, there are two parts of this opportunity for everybody if it gets alive, right, in 2022. It's better service to the customers, and that should be number one. And I think for banks, FIs, it's an opportunity to get in front of the customer again with this initiative. And second, which is more basic, I would say, it's an infrastructure and investment which you can do collectively. So for the longer run, you can share some of those costs, drive to a business case. Well, otherwise you need to locally facilitate all these kind of differences continuously. So yeah, let's see what's going to happen, but yeah, definitely to Klaus's point, right now it's fragmented. With something new, most of the time it first gets more fragmented before it gets optimized. But I think the idea behind is quite interesting. Yeah.
Klaus and Jeroen, I'm hearing it's a long journey. It's an ambitious long journey. At the end of the day, what the regulator tried to do and the ecosystem tried to do is to offer the best experience to the customer. And I feel the program in the Nordics and the program, the EPI, aims to do that again and come back into the play versus the large schemes like the Visa and the MasterCard of the world. So, ladies and gentlemen, we talked about right now the regulatory landscape and what's happening regionally. We talked about the experience, the role of data, the embedded. let's spend the last part of the session now talking about the urgency to upscale technology and the ecosystem capability to help banks embrace the next-gen payments and thrive in the payment for that X era. So if we look into that, and of course, we're going to start talking about it with the banker on the floor, with Philip from Standard Chartered, new age players are becoming predominant and primed to win in payment for the X era. We heard about it earlier on from Renata. They are more aligned with their large and small merchant expectations. Big tech are expanding with acquisition and partnerships. Philip, how important is it for traditional players to quickly upscale their game?
The payment system is expanding rapidly, and banks need to foster a greater symbiotic relationship with market players. So when non-banks are keen on developing value-added payment capabilities, incumbents, such as banks, should focus on expediting innovation, shortening developing timeframes, and connecting the dots. It can be through co-creation, due diligence support, regulatory assistance, financial crime prevention, and helping to remove payment friction. Innovation, in my opinion, is also key. True innovation would come when we have context-aware payments that are an indivisible part of the commerce process, not a messy and an unknown adjunct. True innovation could come from payments being affected machine to machine automatically based on contract execution. Another example of true innovation is when payments become invisible while commerce and prosperity drives on ahead at the speed of light. That is the role that banks of today and tomorrow must play to drive seamless commerce and the purpose to greater exist as a bank.
I love that. I love that. This is the role that banks must play. And the word must, I love the way you insisted on the word must, as it's the only way to remain in the game. Jeroen, I look at you when we talk about remaining in the game. The future is all about marketplace economy, where processing power will be a key differentiator. What are your thoughts on designing and implementing future-proof payment processing platform?
Yeah, what we see right now, there's a lot of factors which are impacting that payment processing. It's a move to instant. It's definitely also the ISO migration, but not to forget also the technology developments, right? On moving to microservices, API, and cloud. And I would say having an efficient processing system is quite vital to I would say being able to cope with the volume growth which we spoke about, but also to be able to expose those services. And because multiple factors are impacting this processing landscape, I always advise to look from a holistic perspective and design a solution for the future, taking into account, of course, the needed processing capabilities, but definitely as well the data leverage and the APIification to be able to expose services in a different way to drive a business. And the last one I would say is, and I know Philippe spoke about it already, is to see with the regulatory and the market infrastructure burdens of upgrades, how can you leverage some of these developments, making it a stepping stone towards the end state of your solution. So not only focus purely on compliance, but take a slightly different angle and leverage it for getting to the end state you want.
Clearly, looking forward, data, API, ecosystem, collaboration are really important. Let's narrow on data. Data, the new oil, and data is emerging as a crucial competitive differentiator, clearly for enabling personalization and making payment use cases as consumable and discrete offering. Claus, would love to get your thoughts on what are your recommendations to leverage data as an asset?
Thank you. I think I'll take a slightly different angle on it, because since I come from an infrastructure company, I might not always talk about experience, even though I'll use the word one more time for you. I think one of the areas where we really think about data is in the fraud and the AML world. the more data that you have in these areas, typically the wiser you get and the more preventive you can be in these areas. And as a centralized infrastructure that now will have data from 4 countries, including cross-border data, we believe that we can actually be very helpful to our customers, to the banks, and to the end consumers in terms of preventing crime. And I think at the end of the day, that's also about experience, isn't it? I mean, if you can prevent a safe experience for the customers, it's the best of both worlds.
It's brilliant. Experience is not only on the front end, is on end-to-end experience with the customer. Philip, from an angle from the bank, what are the recommendations that you could give to leverage data as an asset?
Yeah, I think maybe an aspect I'll touch on is think about the sales approach to clients. It's shifting from the legacy commercial approach to a technology and a data-driven insight approach, and an overall need to be more agile. So incumbents need to redefine. Using data to better drive the orchestrated service offerings that we all provide around payments, customer journeys, broader ecosystems, marketplaces, is an absolute must. And that allows payments to match the speed of commerce.
And in that case, if we want to do that and match it, we need to have the right infrastructure, the right speed. Renata, one element for us we've been hearing a lot is the famous move to the cloud, make the cloud as the place. And cloud is clearly today redefining the technology aspect of the banking and the payment business. What paradigm shift are you observing in as a service models thanks to the cloud?
Yeah, I think it's, excuse me, I think it's amazing the transformation and acceleration that cloud has brought to the industry. As a service models are becoming the go-to for organizations for a variety of reasons, including flexibility and affordability. I think the hypergrowth we're experiencing is because we're seeing advances in as a service components, whether it's tech, foundational or otherwise, financial or even support. As a service allows for component pieces to be created by market leaders, and then new entrants, they decide how to bring all of the different component parts together uniquely. And that's how they're controlling their speed to market and their value proposition. I think everyone's talking about banking as a service today, and it certainly poses a real threat as it opens up financial services market to new challengers. I think that as the as a service trend continues to grow and component parts are built by others, it's not only the challengers that have the opportunity to leverage those. I think to Philippe's point, the legacy players, the large FIs should be thinking about how can they layer these onto their legacy platforms to protect their customer base. I think there's a lot more coming in as a service, and the impact and growth that the industry will see is really exciting.
It's amazing to see that there is a major change happening and everybody remain in the race, but the race is becoming faster and faster and difficult and more difficult. Would love to get your thoughts, Philip, Claus, and Renata. The report concludes that to be front runners, traditional banks will need to collaborate with PayTech, and also with becoming more synergetic ecosystem partners to craft solutions based on the customer experience and not based on the product. One more time, Payment 4.x is about the experience. Philip first, maybe, what are your thoughts about that? And after that, I'll ask Claus and Renata. Philip?
Collaboration, collaboration, collaboration. Collaboration with team competition is key to improving the payments experience for all participants. Hence, working with fintechs, new payment methods, new banks, it's not an option, but it's a necessity. We must deliver the payments experience to clients, leveraging on a democratic access to sophisticated computing power that's there, the modernization of the payment experience, and actually facilitating faster commerce for the world.
Collaboration, collaboration, collaboration. I love that. Claus, what are your thoughts?
But I will build on that, and I will say that why is it that collaboration is so important? It's because the banks, they've got a customer base, and the fintechs, they got great ideas and speed and agility. And if you combine those things, you can hopefully make some money out of it, right? And at the end of the day, this is about making sure that you stay competitive and profitable in the long run. And as such, the banks must collaborate with the fintechs to create the unique customer experience which our customers wish to have.
Fantastic. You are bringing here the agility and the profitability, which are essential. Renata, what would be your thoughts on that?
I may sound like a broken record here on the subject, but I agree with the conclusion of the report. Customer experience is going to drive the winners, and it's not only for the newcomers, it's for the traditional banks, and the connection to the most meaningful ecosystem partners and as a service providers. That's what's going to curate the most meaningful customer experience and what everyone should be focusing on.
Fantastic, fantastic. We said at the beginning when I talk about experience, and if you've been counting, clearly you got the point that it's all about experience. All of you, thank you so much for having joined us today. Thank you for the speaker that came from around the world, and for everybody. Well, this wraps up today's session. It has certainly been an interesting and thought-provoking discussion where Payment 4.X is the way forward, and everybody is in the race. The race is open, and we need to make it work. Thanks to all for sharing your insights, and thanks for all our online viewers. We hope you found the discussion to be informative and insightful. For more information, and if you got excited and interested to download the report, as simple, visit the report website at www.worldpaymentreport.com, as simple as that. And by the way, if you would like to arrange a customized World Payment Report presentation for your teams, or schedule a virtual meeting with Capgemini, please reach out to us, reach out to the team at payments with an S at capgemini.com. Thank you very much for all of you, and have a wonderful day. See you soon.